Welcome to the daily briefing from interest.co.nz. I'm David Chaston. Today we look at November house prices in detail. We'll check what the influential US Fed has decided for their official interest rate settings, and we'll review the latest Eurobond activity. And finally we'll wrap up with details of what the other media are reporting. Statistics gathered by the Real Estate Institute for November show the average dwelling sale price rose slightly to $352,000 from October, and that sales volumes rose from a very quiet October, but volumes remained depressed and were down 22% on the same month a year ago. Median prices reached records in both Wellington and Southland. In fact, the price rises in Southland were remarkable. They were up 12% in 1 month, up more than 35% in 1 year. But for the rest of the country, things are very much plateaued on price. Sales volumes, however, are very much lower everywhere. The number of sales were down 27% in Auckland. The quietest places were Northland and Hawke's Bay, where they were down more than a third compared with November 2006. Even Southland saw 12% fewer sales transactions than a year ago. And days to sell are rising. It now takes an average of 36 days to sell, up from 29 a year ago. If capital gains go out of residential real estate, a home no longer becomes an investment that returns any financial gain. Buyers are gaining the upper hand, and it may mean real sellers will need to adjust their expectations. The influential US Federal Reserve today reduced their key benchmark interest rate by 0.25% in a bid to shore up their sagging economy. Growth in the US is expected to fall from the almost 5% rate achieved in the third quarter to 1% in the fourth quarter of 2007 as credit issues strangle their economy. Today's cut is aimed at preventing their housing slump and credit squeezes from undoing their 6-year economic expansion. The change should help promote moderate growth over time, the Federal Open Market Committee said today in a statement after a meeting in Washington. Recent developments, including the deterioration of financial market conditions, have increased the uncertainty surrounding the outlook for economic growth and inflation, they said. Their economy is faltering after that third quarter surge as house prices drop, consumer spending slows, and banks tighten lending standards for even their best customers. Chairman Bernanke has struggled to insulate the US economy from financial market instability since the central bank began reducing borrowing costs in August. This US action today widens the interest rate differential with New Zealand and seems certain to encourage the carry trade, especially as there is no real sign yet the New Zealand Reserve Bank is ready to lower our rates anytime soon. More than $1.3 billion worth of Eurobond issues were launched in November, which closely matched the maturities for the month of $1.2 billion. Despite ongoing market volatility in bonds, issuance has been relatively strong, with a good mix of Eurodashi and Eurokiwi being issued. Since July, the average has worked out at over $1 billion per month. Maturities remain fairly heavy in coming months. There are more than $2 billion worth needing to be repaid or rolled over in December, and more than $1.5 billion monthly all the way through April 2008. But we're now past the really big maturities that happened in August and October this year, where more than $3 billion were redeemed. It was fortunate indeed that other events helped the markets absorb these effects. Eurobond redemptions are now unlikely to put our currency under much pressure, at least until November and December 2008. And finally today, a wrap-up of some other items of interest. New Zealand Finance Holdings has announced that it successfully negotiated 2 new wholesale funding lines, insulating it somewhat from low retail investor support. The first, Commonwealth Bank of Australia, owner of ASB Bank, has approved a new $40 million facility for New Zealand Finance. The second facility with Westpac increases the warehouse line by $50 million to $250 million in the name of NZF Mortgages. The CBA funding line for $40 million ranks equally with debenture holders, unlike some other companies which have facilities which rank ahead of debenture holders. Of note too is the fact that the interest rate which NZF has to pay CBA is slightly less than NZF pays its debenture holders. A new online real estate sales agent has been launched. jetagent.co.nz is a virtual yet fully licensed real estate agent that allows customers to buy and sell property online. One major benefit is that agent fees look like they could be 1/10 of the traditional arrangement, and that could save sellers tens of thousands per transaction, important when prices are under pressure. You can get more news and stay up with Newsmaker Views on our news page. Join us again tomorrow for the freshest finance news on the web. We'll see you then.